But let's just run through now some graphics, some numbers which really look at what has been happening with the economy in terms of how it was presented in the economic survey in terms of the claims versus the reality. And this is analysis that Prannoy Roy had done on his show last night. And let's just start by looking at the overall graphics, which looks at the growth claim by the government, with the government, of course, claiming that growth has crossed pre-pandemic levels. It's now 9.2%, which means it's now managed to reach to where it was before the pandemic. But if you actually see the chart and look at what has actually happened in terms of the numbers, you'll find that it is, of course, recovering, but there's a huge gap that if the crash had not happened in the last financial year of minus 7%, this bump up is actually what is called from a low base effect. And if we continue to grow as we were earlier, then we are actually short by 12% compared to last time. So there's still a long way to go before we can say that we are back on where we were in terms of the pre-pandemic curve. That's as far as GDP is concerned. The other big contention of the government, of course, has been that they are, and this was in the last budget, that they are going to do a big privatization of government assets, disinvestment as it's called, in terms of what is actually promised and in terms of the reality. So the promise, as you saw there, was huge, 1.75 lakh crore. But look at the massive gap there in terms of what was promised and what actually was achieved. So that's going to impact how much money the government has been able to earn and therefore how much it's likely to be able to spend in this budget. Again, look at the economic survey's claims on manufacturing. Again, where there seems to be, and let's go full frame here, it appears to be that there has been an uptick of manufacturing of 12%, but that's also because there was a huge crash of minus 7% last year. So there's actually a 24% gap in terms of manufacturing, which also explains why jobs continue to be a pressure point. Agriculture, though, is one area which has done reasonably well. Right through the pandemic, agriculture has been, in a sense, the safety net for the economy, and there's been no real shortfall. So that's actually been the saving grace for the Indian economy and, of course, also for millions of farmers and all those who depend on agriculture. Let me go across to Avik Saha, who's with us, Jan Kisan Andolan, colleague of Yogendra Yadav, who's been closely involved with the farmers' movement. Avik Saha was asking Yogendra Yadav this earlier as well, that when you look at agriculture, that's one area which seems to have done reasonably well, but how much of that can the government take credit for, and as likely to during the budget, versus what the reality is and what they ought or should be doing?
Well, you see, the figures that are there show you that production has not gone down. But as always, we've seen this for the last 5 years, the producer is always left behind. We are going to track the promise of the Prime Minister of doubling farmers' income made in 2016. And today's budget is the last budget by which the figures should come to us. For the last 5 years, no figures are there. I mean, I was just reading last year's announcement on this, which says our government is committed to the goal of doubling farmers' income by 2022. That's as cryptic as it gets. So, of course, you're committed because you made the announcement. But where are you and where have you reached and what next? So that's a key area. So as a community, the farmers and farm workers are looking at this budget to see, one, where is the promise of doubling? Two, of course, we know it has not been kept and it has not been fulfilled. So what next is an actually important question. You know, when a budget document, this is a debate on vision versus and data, backed by data. So the key question that is being put today is, where exactly do we stand and what do you really want to do after this? Because bandying figures about agricultural production growth is nice, it's great. As an Indian, I'm proud of it. But those who make that growth happen, where do they stand and what does this government want to do about them?
Right.
And the farmers' movement has told you.
Yes. In concrete terms, Mr. Saha, what is the one or two things then could the budget reflect that is going to actually spur this or make this idea of doubling farmers' income more realistic? Is it to continue to boost prices at which crops are procured? Is it to, some kind of more like expand the cash transfers to farmers under PM Kisan?
No, cash transfers to farmers is not a solution at all. It's a band-aid for cancer. What needs to happen is there's a very wide gap between the price that the farmer gets and the price that the consumer pays. The government simply has to govern that difference. It's not a money issue for the government. It's a governance issue for the government. When a farmer gets 20 rupees for a kilo of paddy, why do we buy it for 60 rupees? And where is this extra 40 rupees going? If the government focuses on that, it is possible to double the farmer's income without increasing food prices. I think that should be the government's priority.
Okay. All right. Let's just go across now. Shubhrakanta Panda is with us, Senior Vice President of FICCI, Federation of Indian Chambers of Commerce and Industry, Managing Director, Indian Metals and Ferroalloys Limited. Good morning to you, Mr. Panda. Thank you for being with us. Mr. Panda, just firstly want to ask you specifically in terms of metals and this area of the economy which is, under your watch. What are you seeing as we go into this budget? What are you seeing in terms of growth, in terms of trying to come back to pre-pandemic levels? Are you seeing any of that momentum or is there still a worry? Mr. Panda, sorry, I think you're on mute. So you could just unmute. Yes.
No, I'm not on.
Yes, sir. Now we can hear you now.
Can you hear me now?
Yes, sir.
Okay. So, clearly in as much as the metals and commodity sector is concerned, it's, that this is an area where there has been actually quite a bit of momentum right through the pandemic. And, but if I look at the larger, picture in terms of manufacturing, clearly, I think manufacturing in India has got a boost from the PLI schemes which have been announced. And effective implementation of those schemes, which is what we expect, will have a significant impact in the next, several years.
Again, but just production-linked incentive schemes, just for our benefit of our viewers who are tuning in, where the government gives incentives to businesses linked to their production. Yes.
That's right. But something I would like to touch upon is actually, several other factors which together can create a more enabling environment for manufacturing industry, manufacturing sector in India. One is, of course, the ease of doing business, which has been a prime focus of the government, and FICCI has certainly engaged at various levels right through the pandemic, and I must say that a lot of progress has been made. Yes. But the other more important aspect is the cost of doing business. And if I touch upon two specific aspects, one, if you look at the logistics sector, clearly, there is a 500 to 600 basis points, difference between what our logistics costs in the country are and what it is in most other competing economies. And investment in this area, which is what we expect to happen, will have both a multiplier effect in terms of, job creation, etc., when you focus on creating logistics infrastructure, as well as the end product, which is to bring down the cost of doing business in India. Okay. And the other aspect in terms of costs, which will provide a boost to the sector in general, is if you look at areas like power, for example, where power sector reforms, the DISCOM reforms, etc., need to be carried forward more vigorously. And so, like I said, there is the incentive side of things, but there is also the cost of doing business and the ease of doing business, which ought to be big priorities.
Okay, but of course, there's always the expectation of improving ease of doing business. But in terms of businesses themselves, and this chronic problem, this is not new. This predates the pandemic, of just not enough capital investment by businesses, not enough expansion, not enough new greenfield projects, not enough job creation.
You're absolutely right about private sector investment lagging. In fact, the data that I have seen that the peak which was achieved, let's say in December 2020, if I remember the December 2019 actually, we are, 2 years hence, private sector capex is yet to cross 50% of that level. So that is certainly a cause of concern. But this is where, government.
But why is that though? Because government will say, look, we've done so much, we've opened up liquidity, we've given tax breaks. Why is the private sector still not investing?
Okay, so clearly two factors, Srinivasan. One is the fact that through the peak period of the pandemic, there is obviously a sense of uncertainty, a sense of not being sure about where things are headed, and that clearly has an impact on investment decisions. Right. And that apart, there has been demand contraction, which is again something that FICCI we have pointed out. Right. That the priority in this budget has to be to take measures which boost consumption, because that will create demand, and that will then start the virtuous cycle of investments, etc. But to specifically answer your question, undoubtedly, private sector investment is yet to catch up, and that is where government capital expenditure has fortunately maintained momentum and must do so until private sector investment kicks in.
Till it kicks in. Okay, and we're seeing that Nirmala Sitharaman now on the steps of Parliament. Let me just go across. In fact, before I come to our panel, we have PKD Nambiar supports BJP with us, Amitabh Dubey of the Congress is with us. But let me just go across to Arvind Gunasekar at Parliament. Arvind, now we are just about, I would say, 45 minutes from Nirmala Sitharaman's budget speech. Arvind, any indication at all that we are getting in terms of the direction of the speech, particularly given the context of elections and the pandemic?
Yeah, I was after meeting the President, briefing the President about the budget that will be presented later today by the Finance Minister Nirmala Sitharaman. Finance Minister Nirmala Sitharaman has reached the Parliament, and even the Prime Minister has reached the Parliament. So a few minutes from now, what we are being told is that somewhere around 10:15 a.m., that is few minutes from now, the Union Cabinet will convene where they will be clearing the budget, after which the budget will be presented somewhere around 11 a.m. So this is a very important budget because the government is projecting that the economy has actually recovered to the pre-pandemic levels, and what the government is saying that this will be a foundation stone for the India to be one of the fastest growing economy. So that's where the government are saying that this particular budget will project us or will direct us towards the fastest growing economy. And in fact, the economic survey has also projected that the next year the growth will be somewhere around 8 to 8.5%. So this budget will be very much important to project India as the fastest growing economy, and we have to wait for the budget, the contours of the budget. And the opposition parties are saying that what they are saying is that the government is actually bringing down the country and also the growth, and we have to wait for the opposition parties' reaction also after the budget.
Okay, thanks very much indeed, Arvind. Let me just welcome Sumant Sinha is with us, the CEO of Renewable, which is one of the emerging players in the renewable energy space. Sumant Sinha, good to have you on. Let me just ask you, Sumant, where are you standing in terms of how you've seen the renewable energy, your own company, do as we go into this budget? How has it been for you in terms of the pandemic? Is this one area which has continued to grow despite the economy slowing down?
Yeah, look, our sector has been growing quite substantially, as you know. So through the pandemic, of course, there was the initial period of little bit of uncertainty about what was going to happen. But I must say the government came out with 2-3 schemes at that time, injecting liquidity into the distribution utilities and carrying forward with the bidding process. And the good news really has been for our sector that even though the economy shrank last year as a whole by about 6.5%, power demand actually was reasonably flat. And this year actually power demand was among the first sectors to pick up, and therefore has grown by about 5 or 6% already this year. So I think it's in line with economic growth, and as a result of that, and as a result now of India's commitments at COP26 at Glasgow, certainly this is a sector that is getting a lot of traction. There was a PLI scheme, as you know, announced for solar manufacturing as well as for batteries. So those will hopefully get allocated very soon. That will result in more manufacturing capacity coming on stream. And as we all know, all future capacity addition in our sector is coming from the renewable energy space. And then electric vehicles is another big area, green hydrogen. So there are multiple levers of growth that are emerging that the government is keen to push forward on. So I think our sector is doing actually quite well, and the government has really been quite supportive.
Okay, that's good to hear. Just in terms of Renew itself, what kind of growth have you seen in the last year?
Capacity. We started last year with about 5.6 gigawatts of commissioned capacity. We are now at 7.4 gigawatts, so we've added more than 35% of new capacity over the course of this last year. We've added about 1.5 gigawatts of solar capacity, about 400 megawatts of wind capacity. We've acquired a couple of assets as well. So we've actually made a lot of progress by growing very substantially. And I think if you look at our pipeline, that's also very robust. There have been a lot of announcements of auctions that we've participated in. So the pipeline actually for us as well as for other people in the sector looks fairly good at this point in time. So I think you'll see, good capacity addition happening of maybe 15 to 20 gigawatts in renewable energy, both this year as well as next year.
Interesting, Sumant. We just had pictures there of the Prime Minister actually arriving in Parliament with the budget now just a very short while away. Just everybody stay with us. We're going to take a very short break and we'll come back. So stay with us. Welcome back to Budget 2022, our rolling coverage on NDTV. Let's go straight across to Chandrajit Banerjee, Director General, Confederation of Indian Industry. Good to have you on. Chandrajit Banerjee, CB, is in the house. Chandrajit Banerjee, do you already want to give the budget a rating before we start, or you want to wait? 9 on 10 already, or?
You would know better than me. Yeah,
okay. Chandrajit Banerjee, quick CII wish list from the budget, but equally Chandrajit Banerjee, as they say, ask not what the government can do, ask what you can do. The point that corporates are not investing enough, not expanding enough, despite tax breaks, despite all kinds of liquidity, government says is pumped into the system.
Yeah, the wish list can go on. One can keep talking about, but it's just a matter of time that we will know whether our wish list is going to be, how much of that will be met. Yes. But there is a lot of expectation. But coming to your question, Vasu, on the investment side, you saw the economic survey, which noted that there appears to be fiscal space for the government to raise its capital expenditure. That was clearly there. And it was also mentioned in the economic survey that government has focused on supply side through deregulation and simplification to enable private investment to come forward as well. That's a critical point. And what we have been suggesting, and what I would really like to see, is a move towards more of self-certification, ease, simplification. That's a primary, a mode of regulatory compliance with checks in the form of
That's
audit.
Not happened enough, because government keeps saying we've done so much for ease of doing business.
No, ease of doing business is, of course, but there are many other things that needs to be done within the ease of doing business. I gave a couple of examples. Make it more self-certification driven. Then also there are issues on, as you know, in terms of litigations and stuff like that, enforcement, or rather, the contracts. That's a big piece of thing, which is important to be done in terms of enforcement of contract, in terms of respecting the contract, a directional policy announcement by the government that one would like to see in the budget that will set direction to all ministries, and it would facilitate more business to come.
What is that is the expectation. What is CB? What is your big area? If you say identify one big area of worry for you right now with the economy, what would that be?
See, I would imagine that the government in this budget should really adequately address is the rural economy. I think that's very important, and I would see a lot on the rural economy side in the budget, which is very, very important. And I think a lot can be done in the rural economy as far as the budget is concerned. As you know, we would like to see a higher quality spend on rural economy. We would like to see that it has acted as a shock absorber, as you know, in the initial months of the pandemic, and the government had also stepped up its rural spending in FY21. However, as you see in the recent period, they have been very badly hit. So I would look at rejuvenating rural demand, holistic focus in terms of both encompassing the both the farm as well as the non-farm sectors, both the farm and the non-farm sectors. Boost consumption demand. That will really bring in consumption demand. So I would really look at a strong emphasis in rural technology, agri-technology, irrigation technology, and all of that. That's going to be very, very critical. Even Mission Mode Agricultural Tech Fund, that's something that can come in, So that's what I would look at into the budget. That worries me.
Okay, well, it's good to have CII talking about agriculture and the farmer and the rural economy. But great to have you on. Chandrajit Banerjee, we'll let you go because I believe you have to go to your other commitments. But let me go across to Amitabh Dubey, Congress Party. Amitabh, now as the government goes into this budget, they claim that they are on a strong footing. In a sense, the lag because of the pandemic has been overtaken. Growth is now at pre-pandemic levels of 9.2%. And so that's the kind of context, that's the wicket that they claim they'll be batting on as Nirmala Sitharaman rolls out this budget. To that, you would say what?
Vasu, the fact is that during the pandemic, our lockdown was the strongest. So our dip was the strongest and our bounce back is the strongest. You can cherry pick the numbers, but if you look at it over a longer 4-year horizon, we're somewhere in the middle of where countries are doing versus growth. We've recovered quite sharply immediately, but over a longer run, remember our slowdown has been going on for quite a while before the pandemic. We're in the middle somewhere. So I think it's possible to oversell that. I think my concern is, and we have to see what the budget does to address this, is that the government just doesn't get it, doesn't understand the root of the problem. As Mr. Banerjee said, as you were asking Mr. Banerjee, that despite all the supply side measures, huge tax cuts, ease of doing business, investment just isn't happening. And the reason investment isn't happening is that capacity utilization is very low. So why would they invest when there's no demand for their products? To simplify, over the past 5 years, the working age population of this country has gone up about 12%, and the number of jobs has actually gone down by 4 million. Right. So you can see that there is a serious problem. The survey data shows us that the top 20% of the country, that's people like you and me, the world of startups, the world of unicorns, our incomes in the last 5 years have gone up 39%. But the bottom 20%, which is Bharat, if you want to term it that, their incomes have gone down 53%. So this is a very serious crisis. It's a very serious problem. And so far, I don't think the government has done enough to address this. Okay. And let's see what happens in this budget. Okay. How would you respond to that, PKD? Nambiar, BJP supporter, because on one hand, you can tout the numbers to show that there's been a turnaround. But as Amitabh and others have pointed out, it's only within the top tier of the economy where things are looking quite good. For everyone else, it's quite grim.
That may not be actually true. If you really look at it, almost 3.9%. One of the sector which was not really affected is our agrarian economy. That is one of the sector which gives the maximum amount of employment even today in our country. So that may not be true to that extent. But then there is one thing I can tell you, that there is we just came out of, or we're just still trying to come out of a global challenge rather than it's not just a domestic challenge. Sure. So of course there are challenges as an economy. We all have wish list. We need to understand we are a diversified country. And being a diversified country, we are also a diversified economy. We have a strong service sector. We have a strong manufacturing sector.
One thing though, I just want to jump in to say this idea that keeps coming up that, because of the pandemic, but we have the numbers. We can actually put up that graphic to show you that the economy was falling for multiple quarters even before the pandemic. So hence the argument that there was economic, either you call it mismanagement or you just call it whatever term one wants to call it. The growth had started to fall even pre-pandemic, and it just got exacerbated by the pandemic.
Let me just bring this to your notice, because this is something which we have been hearing from the last few days because of the budget, that there was a great slowdown during the pre-pandemic. So the word slowdown is not really correct. The slowdown in the growth is
may be the right word to put it. Because of course, if we are expecting a 7% growth or an 8% growth,
what else
that has come down a little bit from the point of view. It is also because of a global challenge. It was, if you really look at it, all the emerging economy across the world were having a very, very major slowdown during that particular period. So it is not just affected. So you need to understand, we are living in a global arena. Every economy is interconnected. So it is not like that we are a standalone economy and where it will nothing will be affected to us.
Firstly, okay, those are the numbers up on screen. Firstly, one can't go on blaming global indices for everything that happens in this country. Number two, not every economy in the world was slowing down. Some economies were actually doing quite well. India was, in fact, one of the global laggards even before the pandemic. But leaving that aside, what are we now heading into? Nasser Salim is with us, Flexi Capital. Nasser, good to have you on. What's your...
Can I just...
Yes. Okay. Sorry, Nasser, before I come to you. Yes, PKD, quickly. And then...
No, what we need to do, and see, there is no doubt that there was definitely a growth slowdown. There's all the fact and the data is absolutely up there in front of all of us. Yes. But one thing we need to understand, as we talk today, we are today in a better footing as a country.
We're in a better footing.
Almost 75% of the population vaccinated.
Fair enough.
I think what we need to do, we are also an emotional economy, Vasu. So we are in a right footing.
We're on a right footing. Let me come back to you. PKD, I'll come back to you because we have with us Sunil Kant Munjal, Chairman Heroes with us. Great to have you on, Mr. Munjal. Thank you so much for joining us. Mr. Munjal, first give us your sense of, before we get into the budget and all of that, give us your sense, Mr. Munjal, of where we stand with the economy. What are you seeing which is kind of optimistic for you and what is worrying you?
So on an average, the economy is looking very good. But as you know, averages hide more than they reveal. Some parts of the economy have moved up very, very smartly and the recovery has been actually quite amazing. But there are still large parts which are suffering, lagging and actually hurting right now, especially the high contact areas like theaters, sports, travel, tourism, and these are very large employers. Even in the manufacturing side of the economy, there are sectors still lagging like textiles, like leather goods, etc. Within the automotive industry itself, which is one of the largest multipliers in any industry, if you see there are two large multiplier industries, manufacturing has automotive and real estate, especially house construction, is the other one. At this moment, both of them are suffering, so they do need some ability to come out of this to overall figure out a way to grow. So I think the ability of the big banks to clean up the balance sheet is essential. Hopefully it will happen now with the bad bank coming into operation. The ability to provide funding to NBFCs to support the small industry and the informal sector is absolutely essential right now, because that's where the job creation will happen. The ability to clean up the entire process and systems for startups is very essential, because I believe that's going to be one of the big engines for growth for the nation going forward. To do this, at this moment, the government will still have to do some of the heavy lifting during this year. One, with the resources available. Two, by additionally creating new resources by more efficient revenue collection, by additional monetization or disinvestments, which does look challenging at this moment because the markets have started to get nervous, both in India and globally.
Right.
Also, to ensure we don't crowd out the borrowing ability of the private sector, the government does need to figure out a way to open borrowing from overseas, especially by making listing Indian bonds globally, etc., and making that easier. Raising funds from overseas to bring into India, I think, is an essential requirement,
right,
while ensuring sufficient additional support to both healthcare and education, and at the same time providing a Narega-like scheme for the urban areas, because there is a large section of the urban population which is still quite poor.
Okay. That's quite a wide canvas of points you made, but let me just take you up on some of them, Mr. Munjal. Now, you made an important point that while there are certain areas of the economy which are doing well, there are lots of other areas which are hurting, like you mentioned, hospitality, aviation and so on. Now, what has been the shortfall in your view between what the government claims it has done to provide a kind of overall safety net in terms of, opening up liquidity and so on, versus the kind of actual support that's needed? Because often people have pointed to other countries where the stimulus package is much more direct. There's been actual cash out. Some small businesses have received direct financial lifelines, particularly in hospitality, tourism, restaurants and so on, which hasn't happened here.
Yeah, that is correct. So, two things. First, full marks to the government for coming in and providing what they did. They started late though, by the way. If you remember, in the early days, there were repeat requests from industry and from economists and experts that government needs to pump in more liquidity into the system, and especially the direct support where it's required. That, I'm afraid, did not happen in the manner one would have liked to see. But to be fair, the overall system is looking so good that some of it kind of gets clouded over. Specifically, the issue you raised actually is a very critical one, to keep people employed, to support employers to pay the salary bills, even if they are partially somewhat reduced in some industries, so that people just don't get fired, because it's hard to find a new job in an economy which is suffering. Fortunately, as I said, in some of the sectors, we're starting to see a turnaround. So the focus, if it can remain on continuing to spend on infrastructure, would be extremely helpful for the economy right now.
Okay. And just last quick word from you. This is a point that I've been talking to my panelists since this morning about why we are seeing, despite what the government would claim have been incentives to industry in terms of whether it's tax breaks or whether it's terms of, just easing liquidity, that there's not been enough capital investment. This is not something which is specific to the pandemic. This is, as you know, been a chronic problem now for several years. Why is that, and how can that be fixed?
So there are two aspects to it. And you're right, by the way, this is a very critical point you raised. One is gross capital formation has been dropping now for a few years. The pandemic just accelerated it, but it had been falling even before that. So I think that is directly linked to consumption. Because if you have a factory and your capacity utilization is only 50 or 60 or below 70%, you are unlikely to go and write a large check and create additional capacity. And that is what is happening right now. Many businesses and companies are starting to get to 70 or 70+% capacity utilization. In a recent survey that was done in CII, it showed that this is the first time after many, many months or many quarters that companies are now talking of capital expenditure plans, which is encouraging. But we are yet to see this come in large droves. It is some companies who have announced this and some sectors of the economy which have announced this. So I think it is important that we figure out a way maybe to expand the PLI scheme, bring investment allowance back for a period of maybe about 2 to 3 years, to encourage people who are sitting on the fence, because there are some sitting on the fence, to start to invest. Because that's a virtuous cycle. Once you start, then you create more capacity, you create more jobs, you create more incomes, you create more consumption. So it is a wonderful virtuous cycle that we need to kickstart, and it is possible. Because we are at that point right now. We are, in a sense, almost at a tipping point.
Okay. At a tipping point. Okay. Great to always hear from you, Mr. Munjal. Thank you so much indeed for joining us, and we'll check in with you after the budget speech. Okay. Let's just get Nasir Salim in, Flexi Capital. Nasir, good to have you on as always. Now, tell me, Nasir, often what tends to happen is when we look at budgets, we tend to forget the previous budget. And we tend to forget all the promises that were made there, some of which are likely to be repeated again. For example, there will again be, targets for privatization or disinvestment, as it's called, that will be set. Last time there was talk of a national pipeline, monetization of a national asset pipeline, raising money through leasing out government assets. Again, we don't know what's happened with that. Where does the government stand on that? Before it rolls out new promises, is there still a backlog of what was announced last time? What has happened to all that?
Srini, good morning and great to be back on your show. I think it's a very important question, Srini. Time and again, we've been asking and raising questions on disinvestments. Asset monetization is the word that you were referring to. And I think, as far as the government is concerned, the history has not been very, it's been a little checkered, if I can say so. But that's also because of the fact that, we've been pandemic hit, and especially in the last 24 months. But having said that, I think, Srini, 2 or 3 things, and, I heard some of your panelists and even to your interesting question. I think, number one, clear expectation is today, as we speak, I'm hearing a lot of panelists across the, news channels, because I've been appearing since morning. I'm hearing there's a lot of discussion on how fiscal prudence has been achieved this year. I think that may not be true. I'll tell you why. We've yet to see a lot of asset monetization disinvestments to take place over the next budget year, which is FY 22-23. And therefore, my first expectation is that we should have a clear outline on how certain sectors can be benefited, Srini, from a perspective of employment generation. You see, the biggest challenge today, I think Mr. Munjal just mentioned it in your show, is that there is an employment generation issue and then there is a consumption issue. How do you marry both these aspirations as far as the government is concerned? My first point is, can we get in certain additional PLIs, production-linked incentives for 3-4 key sectors? Number one, can we look at manufacturing, which is the forefront of it, textiles, infrastructure, leather and food processing? These are, need of the hour. I would want to hear the finance minister today give out certain roadmap on how we can incentivize manufacturing in some of these sectors and create employment generation. Number two, I think a very important key aspect today, which has been repeatedly been saying, is, this entire discussion of financialization of savings, Srini, which is basically have simpler KYC, centralized KYC, structures in place. Because a lot of investors today, a lot of, people are willing to invest in various asset classes. But the challenge is it available, as a centralized KYC? The third point, one of my friends is just messaging me saying, please mention about real estate. It is coming on my next point. I think the biggest beneficiary today of employment generation is real estate. And, and therefore, I must say that, if we can dole out certain incentives, on this entire housing loan for the housing loan buyers and for customers, wherein which the principal and the interest component standard deductions can be increased from 1.5 lakhs to 200,000 is also going to be a welcome step. My last 2 quick points, Srinivasan. Certain incentives for fintechs. You see, today, the MSME sector is, of course, one issue where we are facing a big challenge. The MSME sector has always had big promises to be made, but never delivered. I must admit to you, the MSME sector is burdened by a huge challenge of compliance. Today, there are enough people. I've been, interacting with a lot of our existing clients, and they've been saying this MSME burden on compliance is a big challenge. And I'm hoping that the finance minister will kind of dole out those as well. And fintech startups. Fintech startups is very, very important.
Yes.
They do a lot of pushing today in terms of, microcredit lending for the unbanked population. And therefore, I feel that we should have certain incentives, tax rebates, tax holidays for them as well. Which will kind of address both these issues of consumption and, of course, supporting the entire economy.
I'll come back to you for taxes in just a second. 1 second. I'm coming to you. I'm coming to you, P.K.D. Nambiar. I am coming to you because P.K.D. Nambiar, as much as, of course, the government will be addressing the corporate side of the economy in terms of the organized sector and so on, there'll obviously also be the political consideration, given the timing of this budget, just as we are in the peak campaign season for Uttar Pradesh and other state elections. How is that going to play out, P.K.D. Nambiar, in your view, on this budget? What kind of announcements are we likely to see that will particularly address states like Uttar Pradesh? Are we likely to see an expansion of welfare schemes targeting farmers and so on and so forth? What's your sense?
I just want a quick second before I answer you this. What Nasir said is very interesting. I want to go a step further. For an example, real estate sector, which he was talking about, we are talking about giving additional benefit to that sector because it's a very big employment. This thing. I would go a further step. I think it's high time for the government to give an industry status to the real estate sector. unless and until we don't give an industry status to that sector, that sector will always be considered as a second-class citizen, whereas that is providing the large amount of investment also in the employment. Now, coming back to your question, see, you need to understand that our economy is also on a transformation stage, Srinivasan. We are becoming more of it's not anymore that a test cricket match. Our economy is more of like now behaving more of like a T20, that it is speed which is a big matter of concern. The idea of way we have to handle our economy today is not the age-old way wherein we were talking about the waterfall method and the new method which the government is agile economic status and welfare is not going to be. What I wanted to say is that welfareism is not going to be anymore a significant part of any of our economy from now onwards. The reason being that we had it in the past, elections are keep coming and going, but that will not be affecting a budget. Maybe it may have a little bit of tinge somewhere, because at the end of the day it's politics, it will be there, but then it is not going to be the predominant effect of these elections which
interesting. Once again, how would you make a statement like that, given the fact that if you look at the numbers when it comes to whether it's food subsidies, fertilizer subsidies, whether it comes to Narega allotments, whether it comes to direct cash transfers through PM Kisan and so on, those numbers have actually been quite large. And in fact, the government keeps talking up how those numbers are constantly increasing. So I'm curious that you say that. But Amitabh Dubey, what do you make of the political dimension of this budget? Because it's interesting. This is not the first time it's happened that you have the timing of the budget such that it's bang in the middle of elections. The model code is technically in place, but obviously the government is going to use it to push through announcements which are likely to be election-centric.
Vasu, obviously there's always a political context, and this government is quite expert, as you implied with your earlier question, of making big bang announcements. So they win the headline battle of the day, they win the narrative of the week, and then no one really looks at the execution and the implementation. Last year they were talking all about how they're going big on spending to save the economy. Today they're talking about agile budgeting, which is really another word for we didn't spend as much as we said we would, and therefore the deficit is looking smaller. And if you go back and look at the actual spending numbers, they are way below what was targeted. So the spending has actually been very subdued, even though the composition of spending last year obviously was more in the direction of food subsidies and so on and so forth. Now suddenly they're making a virtue out of it. I think the concern that I have is execution, because a lot of these announcements are not executed properly. If you just look at the disinvestment numbers, to take an example, 5 out of 7 of the last budgets, they've completely missed their disinvestment target. You've had the capacity capex of this government is way less than where it needed to be as a percentage. So my concern is that there's more focus on announcement and on winning narratives, and not so much on execution, which often gets missed by many people.
Okay,
Srini, I want to come in.
Yeah, yes, I'm just give me a second, because we have Mr. TV Narendran with us, CEO and MD Tata Steel is with us. Good to have you, Mr. Narendran. Good morning to you. Just give us a sense, Mr. Narendran, again, before we get into what you would like to see in the budget, in terms of where do you stand yourself in terms of how you've seen Tata Steel do, the steel sector during this time with the pandemic? Are you seeing now business back to pre-pandemic levels, or is there still a worry?
No, I think as far as the metals industry is concerned, steel more specifically, we are certainly back to pre-pandemic levels. We are influenced by geopolitical and global issues. So the fact that China has reduced its exports of steel has certainly pushed up commodity prices. And the steel industry is probably the first ones in the private sector to announce significant investments. So it's not just Tata Steel. I think all the other peers that we have in our industry have all announced investments exceeding 100,000 crores for the next few years, in fact, even more. So I think there's a lot of private sector investment coming on the ground from the steel industry to support the growth in demand for steel. And it's reflecting a better profitability for the steel sector, less threat from China, and better balance sheets.
Okay, no, that's wonderful to hear. So you would say that in terms of during the pandemic period, were there major stress points?
Yes, there was. But what had happened in the first year of the pandemic during wave one, the recovery in China was ahead of the recovery in the rest of the world. So actually the Indian steel industry grew out of the pandemic by exporting steel to China, which was, unimaginable maybe a few years back.
Right.
And after that, as Indian economy came back on track, the steel consumption in India grew, and that supported the recovery in production and supply for the Indian steel industry.
Right. So, Mr. Narendran, how would you explain this? Because like you mentioned, there are sectors like yours which has done really well and is looking quite robust. And on the other hand, if you look at the numbers when it comes to jobs, when it comes to incomes, when it comes to consumption, those are all still down, in some cases almost worrying. How would you explain this gap?
So there are a few issues. One is if you look at sectors which were struggling because China was exporting a lot, those sectors have started doing well because China is no longer exporting as much as it used to earlier. Second point is, if you look at sectors which are dependent on infrastructure, they've started doing better because the government has announced a lot of infrastructure investment. Year on year, the infrastructure investment is growing, so which is positive. Then you have sectors which are high contact sectors, right? Like hospitality, restaurants, travel, tourism. They've been impacted the most by all three waves of the pandemic. They are largely local businesses, impacted by local issues and very, very local issues. Oftentimes it's not what happens in India, but what happens in your district, which matters because of the lockdowns and various other things. I think they've suffered. A lot of disruption is taking place in those sectors as well. So that's an area which we need to look at because they employ more than 10 million people. So there are issues, I would say, sectors which are high contact sectors, informal sectors, because there's a formalization of the economy happening and that is impacting the informal sectors and the MSME. Even in MSME, some have done well, but there are some who've certainly struggled. So I think there are pockets in the economy which need support.
Okay, and last question very quickly. You believe that the government has the financial or the fiscal leverage to provide some support?
I think so. I think the fiscal deficit has been as planned. Tax collections are increasing. If you look at GST collections, it's pretty strong still, and we've not yet fully into a recovery. So I think there is room. We just need to decide the glide path. There needs to be a glide path to fiscal deficit levels that we want to chase in the medium to long term. But we should manage the glide path in a manner that we don't derail the recovery.
Okay. All right. Well, great to have you on, Mr. Narendran. Thank you very much indeed for joining us.